Well, we think that overall, what's happening is the fact that the Chinese government will need to provide additional stimulus because obviously there's still a lot of backlogs in terms of productivity as well as manufacturing. So what we're expecting to see is that, first quarter GDP is probably going to go down from the previous consensus of about 6% down to about 4%. And we're expecting potentially to see a bit of a recovery as we approach the second quarter and onward. So as a result, I think a lot of these specific policies that's being implemented and will be implemented going forward will specifically, really help, I would say, especially on the consumer demand side, because there is definitely a lot of sectors, and in particular the consumer discretionary sector in China, which is really impacted right now as a result of the coronavirus.
And on that note, should we think about this as a direct reaction to the coronavirus outbreak, given that it's just come about 3 weeks after that trade truce?
Yeah, it will be part of it. And again, I would expect to see, sort of multiple different types of, various stimulus being implemented by the Chinese government over the coming months in order to really see and really sort of prop up the economic growth for the full year. Are we expecting to see a full, sort of 6% year-on-year growth for 2020 GDP in China? Not likely. We're probably going to see somewhere more closer to 5%. But in order for us to really reach that 5% GDP growth, we are definitely going to need to see quite a bit of specific improvements in terms of sort of economic activities as we approach the second quarter, because China has already been affected quite heavily during the Chinese New Year holiday period, which normally accounts for about 10% of overall consumption during the first quarter. And so as a result, without that Chinese New Year holiday period during last week, and without sort of activities there, there's going to be a lot of ground for the various Chinese economies and various sectors to make up that particular 10% loss that we saw in consumption during the first couple of weeks of, sort of the last couple of weeks in particular.
Ken, very clear on what you think is going to happen from a consumption perspective. I just want to ask you, again, taking it back to phase one trade deal, what do the announcements overnight mean for China's ability to actually reach those pledges? Because a couple of weeks ago, many analysts like yourself and others were watching and looking at these numbers and saying it is a bit of a stretch for China to begin with to expand their purchases of U.S. goods by $200 billion over the next 2 years. Now add to that coronavirus, slowing backdrop, consumption getting hit. What does that mean for their commitments? And do you think that is likely to be problematic to U.S.-China relations?
Yeah, the thing is that because the fact is that, with what's going on in China and because of economic growth, expected to slow down quite heavily, China has definitely, a lot more sort of involvement in terms of their commitments with the U.S. Because if there were going to be, let's say, anything changing in terms of their overall commitments in terms of producing agricultural products and so forth, that could potentially, have a bit of a, I would say a backlash and potentially having an impact, sort of between the U.S. as well as China on that front. So as a result, that's one of the key reasons why, we've had expected, sort of especially more recently, that, China would have to follow through with some of their commitments, because if not, it could have had quite a bit of repercussion in terms of what China is trying to achieve this year.
Can I just ask you how you're playing this? We've obviously seen a big rebound in some of the commodity currencies overnight. Aussie yuan, as we were just talking about, has appreciated somewhat. But do you have a preference in whether you're playing this in equities or commodities rebound, or are you just staying out of the market for now?
No, right now we are definitely looking for some opportunities within the equity space, to be honest with you, because when you look at it, and given the recent sell down that we saw over the past week, and obviously the markets have started to rebound a bit, but a lot of the consumer plays, especially the consumer discretionary side, has been hit quite a bit as a result of the coronavirus. So we're now definitely seeing some bit of opportunities. When you look at some of the various sectors, in particular within the consumer discretionary side, you looked at Macau. Macau casinos are now closed for the next 2 weeks, but, a lot of that were somewhat priced in already. Some of the negatives have been priced in already because we knew for a fact that, there was very little, gamblers that were going to Macau anyways during this past Chinese New Year period. And so having closures of the casinos actually, sort of a lot of that negatives had already been priced in. And so as a result, that's why we're starting to see a bit of a correction now and a bit of a, sort of a price recovery in some of the Macau stocks. And there's a lot of other discretionary stocks, which potentially we could see some benefits to as well over the coming months in China as we start to see more policies being implemented to help stimulate the overall economic growth and to help stimulate the consumption growth in China in the coming quarters ahead.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.